This is Nightly Business Report with Sue Herrera and Bill Griffin.
Rough week. The Dow suffers 5 straight weeks of losses as investors fear the trade war with China will hurt economic growth. Long haul, truckers are getting squeezed by tariffs, creating a bumpy road ahead for that industry. What's old is new again. Hollywood is betting that the summer sequel will be the secret to box office success. Those stories and more tonight on Nightly Business Report for Friday, May 24th. Good evening, everyone, and welcome. Bill is off this evening. Stocks rebounded after yesterday's steep sell-off, but it was not enough to save the major averages from weekly declines. This week, investors were rattled by escalating trade tensions between the world's 2 most powerful economies. And while some say the damage will be limited, the market seems to be growing more concerned that tariffs could hurt global growth, which in turn could pinch corporate profits. For today, those worries were put on the back burner. The Dow Jones Industrial Average added 95 points to 25,585. The Nasdaq was up 8 and the S&P 500 rose 3. But the damage was done. For the week, all of the major indexes fell. The Dow now down for 5 straight weeks, its longest losing streak since 2011. And oil prices recorded their worst week of the year, declining about 6%. Mike Santoli has more on the market's recent decline and what might come next.
The stock market's May malaise can so far be viewed as a normal pullback after a very strong 4-month rally, a routine reset in an ongoing bull market. But the high-stakes trade war and ongoing fragility of the global economic cycle carry the risk that this downturn might deepen into a more serious correction. The S&P 500 index was down 5% from a record high at its worst this month. The retreat coming right as the trade frictions with China grew more intense. The market, on average, has 2 to 3 pullbacks a year of at least 5%. So in itself, this bout of weakness is perfectly typical. Even after this drop, the market this year remains up more than 12%. That's a more than respectable gain after a 6% decline in 2018. Yet the tariff hikes and trade disruptions are striking the economy at a delicate point. Growth was already set to slow after the tax cut aided 3% U.S. growth rate of last year, and Chinese and European indicators have remained sluggish. This complicates the consensus projection of a rebound in U.S. corporate profits toward high single-digit percentage growth in the second half of 2019. The second half of this year begins in just over a month, after all. The Treasury bond market reflects this tension, with the 10-year yield sinking to an 18-month low this week as investors brace for slower growth and price in a higher chance that the Federal Reserve will be moved to cut interest rates by the end of this year. The Fed has so far declined to indicate that this is its intention. That's another source of tension. Many parts of the market have already been under a lot of pressure. Semiconductor, transportation, and small cap stocks are all more than 13% below their highs, as investors have punished the companies most reliant on either China trade or a brisk U.S. economy. Does this mean most of the adjustment to the ongoing trade standoff and economic slowdown has been made? Well, the answer will determine whether the market is undergoing a benign pullback or the start of something worse. For Night Business Report, I'm Mike Santoli at the New York Stock Exchange.
Now, the ultimate cost of the tariffs is the big unknown hanging over the economy. And tonight, Steve Leisman brings us some new estimates.
In the wake of new tariffs from President Trump on China, economists have now dramatically changed their outlook. They had been forecasting a trade deal with China, and now they're forecasting a prolonged trade war. They plugged the new tariffs put in place this week into their estimates, and another round they now believe is on the way. As a result, they see higher prices in the U.S., lower growth, and reduced confidence. Goldman Sachs in a report says that the new round of tariffs would shave another half point off growth. So if the economy was going to grow 3%, it would now grow 2.5%. Morgan Stanley believes overall prices will be 1/4 point higher, and the New York Fed estimates it will cost each American household $831.
If you impose tariffs on consumer goods, the upward effect on inflation will be actually greater and faster. But you have to remember that these tariffs are negative for growth.
Nomura in a report said, we expect most of the impact on GDP growth to come from lower business investment. That's as a result of lower CEO confidence. Producers may be able to source their goods from outside of China. That would keep costs down. But economists say if it was cheaper elsewhere, they'd already be producing there. So even if production relocates to avoid tariffs, prices will still be higher and growth still weaker. For Nightly Business Report, I'm Steve Leisman.
We've talked a lot about the impact of the cold economic war on various sectors, but one we haven't touched on yet is the trucking industry, which plays a critical role in getting both imported and exported goods where they need to go. So we sent Frank Holland to Aston, Pennsylvania.
Keep on trucking is a popular saying, but this year, the only thing truckers are saying is that revenues are declining.
2019 has been a challenge.
Mark Zimmerman is a third-generation trucker. The portion of his business under contract has remained fairly steady. But the daily rates for trucking, known as the spot market, have seen declines since the tariffs went into effect last year. Retailers and manufacturers front-loaded shipments into the U.S. at the end of 2018 to get ahead of those tariffs. Now, their warehouses and stockrooms are full, and those companies are in the driver's seat.
They say, I don't have to move it right now. I'm going to negotiate a rate that's a little bit lower than what I thought I was going to pay initially. And the trucker then is saying, okay, if I want to move that load, I have to be willing to negotiate and come up with a lower rate.
With the shippers having the pricing power at this time, it definitely has an effect on our lower revenue. And it's also dropping to our bottom line, where we don't have the ability to increase as our costs increase for 2019.
The rates for standard trucks have fallen 19% since last April. For refrigerated trucks that carry food, nearly 14%. Flatbed rates for industrial goods are down about the same amount. The impact felt by Zimmerman and big names like J.B. Hunt, Schneider National, and Knight Swift, all reporting lower revenues this year, all seeing their stock price drop double digits over the past year. Lower U.S. exports are also hurting trucking margins. When drivers of this Pennsylvania company drop off a trailer like this one and pick up another at the same time and at the same place, it's called a dual transaction. It's more profitable, but trucking companies say it's happening less and less at major ports.
We've seen dual transactions fall over the last 5 years from anywhere from an 80 or 85% normal to under 20% across the board.
There's hope that a trade deal can reverse this trend as the industry seeks new roads to revenues. For Nightly Business Report, I'm Frank Holland in Aston, Pennsylvania.
Believe it or not, the trade war with China may be helping homebuyers as well as the nation's big public builders. Diana Olick explains the ripple effect.
Tensions over the China trade war had investors rushing into the bond market this week, causing the 10-year Treasury yield to drop. Mortgage rates loosely follow that and took a deep dive. The average rate on the 30-year fixed fell sharply and is now at 4.1%, compared with 4.29% at the start of the month. While that may not seem like a lot, today's home buyers are incredibly rate sensitive because home prices are so high. They're already stretched. And that's why stocks of the home builders are so tied to rates. In yesterday's sell-off, they were the winners. Prices for newly built homes are soaring as builders deal with higher construction costs, especially labor. The median price of a new home sold in April hit a new record for the month. Now, despite the market recovery today, rates are likely to stay in this new low range or even go lower. That could give an unexpected boost to the summer housing market after a pretty mediocre spring. For Nightly Business Report, I'm Diana Olick in Washington.
Durable goods orders fell in April. According to the Commerce Department, orders for goods designed to last at least 3 years fell 2.1%. And within the report, a closely watched proxy of business investment cooled off. And orders for civilian aircraft dropped sharply, likely reflecting the grounding of Boeing's 737 MAX jet. Following that durable goods report, J.P. Morgan lowered its overall economic growth forecast for the second quarter to just 1%. Boeing is reportedly facing an SEC probe into disclosures about problems with its 737 MAX jet. According to Bloomberg, the regulator wants to know whether the company was, quote, adequately forthcoming to shareholders about issues with its troubled fleet. And late today, the Wall Street Journal reports that the MAX's return has been delayed by the FAA's reevaluation of safety procedures for older 737 models. Boeing says the safety of the models is not in question. Despite those reports, the stock rose more than 1% in today's trading session. And United Airlines is extending its cancellations of Boeing 737 MAX flights through early August. The carrier said that will result in about 40 or 45 daily canceled flights. Southwest and American have already suspended those flights into August. It is time to take a look at some of today's upgrades and downgrades. Dow was upgraded to neutral from underweight at JP Morgan. The analyst cites conservative estimates for the second half of the year and unresolved trade issues between the U.S. and China. The price target is $49. The stock closed just above that level at $49.20. Blumen Brands was upgraded to buy from neutral at Guggenheim Securities. The analyst believes the company is in the beginning stages of a turnaround. The price target is $25. The shares rose a fraction to $18.37. And Constellation Brands was downgraded to equal weight from overweight at Morgan Stanley. The analyst cites the potential slowdown in demand for beer this summer, as well as the stock's valuation. The price target is $220. The shares fell 3.5% to $198.68. Still ahead, tech stocks have been caught up in the trade war, but that's not stopping our market monitor from finding some buys in that sector. As we head into Memorial Day, one story caught our attention. It deals with the unintended consequences of the new tax law, and it is affecting Gold Star families. Elon Mui has our story.
This is us on, actually, the Villa Golf in this one. So, and that was our last homecoming. So, and the other one we did not have because he passed away. So.
Memories.
Memories, yeah.
It's been 4 years since Yassine Wade lost her husband, Daniel, a Navy lieutenant. He suffered a massive heart attack while deployed on a ship in the Mediterranean Sea, leaving her to raise their 3 young sons on her own.
I think I'm still taller. No. Even if you get taller, I'm still the boss. You realize that, right?
No. They live comfortably in the Northern Virginia suburbs, but they don't have a big financial buffer. So Wade was shocked when she filed the household taxes this year and got hit with a bill from Uncle Sam.
If I could have my husband back and live on less, I would totally have him back and I'd be poor. But I feel upset because our husbands have given so much and this is how we're being treated.
It's an unintended consequence of the new federal tax law, and it's devastating Gold Star families like Wade's. When a member of the military dies while deployed, their spouses receive special benefits. Often, a portion of that payment is transferred to their children. Well, that money has typically been taxed at the lowest rate, generally 12 to 15%. But now, many families are finding that rate has tripled to 37%. For Wade, it's a difference worth hundreds of dollars.
Good morning. My name is Yassine Wade.
Wade is pleading with Washington to fix this problem, and lawmakers appear to be listening. There's bipartisan legislation in the House and the Senate to restore the old tax rates on benefits paid to children. And both sides of the aisle say these families have sacrificed enough.
We're here all prepared to honor these men and women coming Monday for Memorial Day. But we need to let our actions here in Congress speak louder than our words.
But Congress left for their Memorial Day recess without reaching a resolution.
I don't think that that's how he thought he was going to leave us. I don't think he thought we were going to be taken care of. I don't think it's fair that we should have to take another financial hit and another burden after dealing with all the things we have to deal with, which is our grief, our children's grief, and the financial burdens that come with all of that.
All Wade can do is hope and wait. For Nightly Business Report, I'm Elon Mui in Washington.
Across the Atlantic, British Prime Minister Theresa May has resigned. This decision comes after 6 months of failed attempts to cut a deal with Parliament, which would ensure a smooth exit from the European Union.
I negotiated the terms of our exit and a new relationship with our closest neighbours that protects jobs, our security and our union. I have done everything I can to convince MPs to back that deal. Sadly, I have not been able to do so. I tried 3 times. I believe it was right to persevere, even when the odds against success seemed high.
Britain is scheduled to leave the EU at the end of October. The so-called Brexit is being cited as a potential risk to the global economy. Footlocker may be losing its firm footing, and that's where we begin tonight's market focus. The athletic footwear and apparel retailer missed estimates due to increased pressure as companies like Nike are selling products directly to customers and bypassing retailers altogether. The company also trimmed its full-year profit guidance. Footlocker plummeted today nearly 16% to $44.40. Hibbett Sports posted better than expected results thanks in part to growth in sneaker sales and a rise in same-store sales. The company also raised its guidance for next year and announced a new independent chairman. The retailer's shares jumped more than 20% to $23.96. Activist investor Third Point has reportedly bought a stake in health insurer Centene and wants it to consider selling itself rather than go through with its $15 billion merger with WellCare. Earlier this month, it was reported another pair of hedge funds were considering a challenge to that merger, believing Centene could do better if it was sold. Centene is the nation's largest provider of Medicaid health plans. Shares of both Centene and WellCare were higher today. A long-awaited $5 billion settlement between Facebook and federal regulators over privacy issues is reportedly now being delayed due to a partisan split at the Federal Trade Commission. The Wall Street Journal says the GOP chairman of the FTC is struggling to win support from at least one of the two Democrats on the panel who are concerned the settlement won't be tough enough. Facebook shares were up a fraction today to $181.06. And the FDA approved the world's most expensive drug. Novartis' new gene therapy will cost more than $2 million and is used as a one-time treatment for spinal muscular atrophy, a leading genetic cause of infant mortality. The company says it is, quote, working closely with insurers to create 5-year agreements based on the success of the treatment. Novartis rose more than 3% to $87.52. Time now for our weekly market monitor who likes tech stocks, but he recommends being selective in the sector. Joining us is Steve Dudash, president of IHT Wealth Management. Steve, welcome. Nice to have you here.
Thank you.
Tech has been extremely volatile as we work through all of these trade headlines. So you did give us 3 picks that you think may be able to weather that storm a little bit better than others. Amazon is your first pick, and there are a lot of very bullish calls on the street about Amazon, but tell me why you like it.
Listen, our economy right now is in a very, very good place. The only thing that's holding it back is the threat of this trade war. And this trade war, it's just show. This is theatrics. This is just about people, two sides, acting strong and trying to negotiate the best terms they can, which is normal. Like you had Mike on earlier this segment talking about how the markets have pulled back 10%, but that's a normal year. That's where we're at right now. So we're looking at defensive technology companies, and that means companies that have lots of cash, lots of earnings, and frankly, something that me and you are going to use more and more of no matter what's going on. But with Amazon in particular, you can make the argument that if the economy pulls back and if this trade war drags on, it actually helps a company like Amazon because frankly, the barrier to entry to get into their business is so massively high that if the markets pull back, the economy pulls back, it's going to squash anyone else who's trying to get in there and therefore make the market even tighter or better for their type of company.
All right, next on the list is VMware.
Yeah, VMware, this is a little bit different, but again, this is a defensive term I'm thinking about for people's portfolios. We're talking about a company that takes data and crams it down and puts it in smaller spaces and makes it more economical to store, more economical to transfer. If things get tighter, if the trade war does go on for a little bit longer, companies are going to need to make more profitable ways of holding data. Me and you both use data more today than we did 5 years ago, and 5 years from now, we're going to use it twice as much, if not more than that. Companies like this will be profitable now. They are profitable now. But in the future, as the economy keeps growing, as we keep using technology, the Internet of Things more and more, you're only going to see more growth in these type of firms.
Google's parent Alphabet is also on the list. There are some regulatory concerns that have been weighing on the stock a little bit, but why do you like Alphabet?
Those regulatory concerns and the market pulling back is why something like this right now is a buy, and the whole segment is a buy right now, in the sense that Google is going to be used more and more in the future. If this economy pulls back, we are not going to use Google less. If If unemployment goes up a couple points, we're not going to use Google less. You're right. There are some regulatory things both here and overseas. That's never going to go away. When you're talking about massive companies, you're always going to have that aspect. But you're buying in at a cheap price right now. That's really what we're talking about with any of these opportunities. You're getting in at nice price points because people are afraid of things that shouldn't be afraid of right now, and therefore makes things more valuable for us.
Steve, thank you very much. Steve
Thanks,
Dudash with IHT Wealth Management. Coming up, where's the beef?
I'm Jane Wells in Los Angeles. Are you going to a friend's house for a barbecue this Memorial Day weekend? Be careful, they may sneak some fake meat onto the grill. Can you tell which one? Coming up, the potential for the alternative meat market and the obstacles.
One quarter of working Americans have no retirement savings. A new survey from the Federal Reserve shows that many households still struggle to cover their day-to-day expenses, despite a strong job market. Nonetheless, 3 out of 4 say they are living comfortably. Well, Memorial Day weekend marks the unofficial start to summer, and with that comes trips to the movie theater and lots of barbecues. So we end our program tonight with stories on both. Jane Wells is up first with a look at what's cooking on America's grills.
Is it real? No. Perhaps it's appropriate that here in the capital of fake, La La Land, Beyond Meat is leading the fake meat charge. How do you do that? The company had the best performing IPO in years. Meat alternatives are showing up in more fast food chains and grocery stores. But Beyond Meat is spending so much on improving the product and scaling, it's not clear when it will be profitable.
Our current household awareness is at 2%. We've got a lot of customers to go out there and talk to.
Would you ever try the meat substitutes?
No, I would never try it.
Never have, but I'd like to try one sometime.
Even so, as the summer grilling season starts, demand for meat alternatives is heating up. Impossible Foods has warned of potential shortages. Beyond Meat went through its own supply hiccups a couple years ago, and Ethan Brown says he's not going to let that happen again.
What I charge the team with is to be available to have capacity and feedstock and ingredients sufficient enough to go twice the levels of demand that we expect.
Okay, this is fake meat, this is real. Fake meat often has a few more calories than real meat and higher sodium, but of course it has 0 cholesterol and lower fat. The real difference right now is the price. Fake meat products cost at least 50% more than real meat. Ethan Brown said it's a matter of building up his supply chain and convincing farmers to cut out the middleman, the cow, which he says is a less efficient producer of protein from plant food than his company is.
I've set a goal within the company, and it's just an internal goal, but it's a 5-year program to at least one category with one product to be able to underprice animal protein in a significant way.
Barclays estimates alternative meat could take up 10% of the global meat counter in 10 years and be worth $140 billion. But the industry has its work cut out for it.
Would you ever have a fake meat burger?
No, ma'am.
Why not?
Real thing's the real thing.
Though it's getting harder to tell what's real from what's not. For Nightly Business Report, Jane Wells, Los Angeles.
And now to the summer box office, which will bring a new twist on old franchises. Julia Borston has more.
Oh, great one who summons me.
What's old is new again for the movie business this summer. Studios and theaters are hoping familiar brands will draw a broad audience and turn around the box office. North American ticket sales are down nearly 10% so far this year. The fact that Marvel's Avengers Endgame, which opened last month, broke so many records means people are more likely to return to theaters.
It's all about momentum in the summer, and certainly Endgame set up the summer movie season to be really strong because you have so many people seeing that movie being inspired to see other movies by virtue of in-theater marketing and trailers for the upcoming slate of films.
Aladdin is a key example of a big trend. Studios counting on tried and true brands to draw families. Perhaps the most highly anticipated example, Disney's Lion King remake.
No, I got it.
though Pixar's Toy Story 4, also a Disney film, and Universal's Secret Life of Pets 2 are using a similar playbook. Hopes are high that the likes of The Lion King plus big action films will draw moviegoers. One reason why theater chain stocks are up this year, even though box office receipts are down.
Remember me?
Another draw this summer, big action movies are back, such as Universal's Fast and Furious spinoff, Hobbs and Shaw, building on the success of the 8 Fast and Furious films that have grossed over $5 billion worldwide. And fresh on the heels of Avengers Endgame, get ready for more Marvel. Sony's releasing Marvel's Spider-Man Far From Home, then Disney will release Fox's X-Men movie, Dark Phoenix.
There is no superhero burnout at all at this point. It seems that audiences can't get enough. And Spider-Man Far From Home is going to be a huge beneficiary of all the goodwill and the excitement surrounding Endgame. And this becomes a must-see movie like every successive Marvel movie. And Endgame sets up Spider-Man Far From Home perfectly to be one of the biggest movies of the summer.
Despite the year-to-date declines up until this point at the box office, with so many of those big brands roaring back, the annual box office could actually end up setting a new record. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Before we go, here's a final look at the day's numbers on Wall Street. The Dow added 95 points. The Nasdaq was up 8. S&P 500 rose 3. For the week, all of the major indexes were lower. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend. We'll see you Monday for a special edition of NBR.